The Force surrounds us and penetrates us. It binds the galaxy together. You must unlearn what you have learned. Every aspect of your life is impacted by taxes, whether you know it or not. This podcast will educate you and also uneducate you. The latest clickbait tax trend. Is it accurate? This is a podcast for regular people. It may be hosted by a CPA and certified financial planner, but it's not for us. Instead, this is a chance to tell you a story about how I use tax law, yes, tax law, to save a couple's marriage, or the time financial planning prevented the estrangement of a father and his daughter. I'm Cecily Welch. As the accountant you can understand, I help people navigate and understand the one thing that impacts every financial aspect of your life, taxes. This is the Tax Translator podcast. Erica, welcome to the Tax Translator, where tax speak equals human, or tries to be. I really appreciate your taking the time to be with me today. And it's with intent that I asked you to be a guest, and thank you for agreeing. I'll take a second to just level set us and then give you a chance to introduce yourself. And then I think people will understand why I asked you to join me on the podcast. So I'm sure you've heard me say this before. I'm Cecily Welch, the accountant you can understand. And I care about people. The world cares about money. So I figure the more people who know about money, the better the world will be. Part of the challenge that we get to with any financial discussions, all the different tidbits here and there, all of the one-liners that you hear, we kind of don't talk about the tax piece of it. And anything related to finance and the economy kind of all swims in the tax ocean. Mm-hmm. And one of the topics that I recently did a newsletter on explaining how they work a little bit in English was called tax credits, the good, the bad, and the ugly. Mm-hmm. And Erica, the space that you work in, people think about tax credits because it's related to childcare. So Erica, you are the executive director of Nana Grants, and your motto is childcare plus college equals economic mobility. Tell me a bit about you and tell me a bit about Nana Grants, please.
Okay. Well, Cecily, thanks for having me. You really are the CPA that makes all of this understandable. If you can work with me, then you can work with anybody, because I like to understand what's happening, but I also kind of don't want to be taught to fish. I want you to just throw me the fish. So you're good at doing both. So I founded Nana Grants in 2016. I was raised by a single mom, and we lived with my grandparents when my mom was going to nursing school. And I was just sort of always raised knowing that if we had not had my grandparents to help us, we certainly would have been on public assistance. Possibly, we might have been in a shelter or some type of housing support like that. So we were very fortunate. So later in life, when my kid went off to college and I was at a point where I could start thinking about giving back, I really wanted to do something to help single mothers. And as anyone who's raised a child or paid for childcare knows, the cost of childcare is a barrier to everything, really. I think when you have small children, your budget sort of revolves around how are we going to, raise this child, make sure that they're safe and getting the education that they need, but we also need to work and pay for rent or mortgage or what have you. And I think it's just a tragedy that childcare is a barrier to, in particular, low-income single mothers finishing their degrees. So we pay for 100% of the cost of childcare until a mom graduates. Many of our moms start with us getting maybe a technical college certificate or an associate's degree, and they get that traction and they start going and they come to us and say, hey, I'm about to finish my associate's degree. Now I'd like to get my bachelor's degree. Will you continue covering me? And we always say yes, because we love to see our moms, get that bachelor's degree and get out into the workforce and be able to support their families and have benefits and stable salaries and all of that good stuff.
That's an amazing mission. And I can see the connectivity of your personal experience. You are informed about where the problems are and some potential solutions. Yes. And this is right on target of why I said, I bet you Erica would be a great person to talk to about credits, because people think about credits as a great way to help whatever you're trying to help. There's childcare credits, there's child tax credits, there's housing credits, there's, I think Georgia, I saw a list, it's like 40 or 50, tons of credits, and the IRS has credits. And do you remember when I asked you if you would like to get on the Tax Translator podcast, and I was thinking we talk about tax credits? Do you remember what your response was?
I said I have lots of opinions about tax credits, but I feel like I'm not an expert in that area. But I have to say, after the invitation, after I accepted it, I spent the weekend going down the rabbit holes and reading about tax credits. And I have to say, most of it validated my initial opinion, which is that they don't always do what we think they're doing.
That they're doing.
Society.
And when you told me that, my thought was, yay. I want someone to talk about taxes in normal speak. How does this impact our everyday lives, or how does it not? What is, I'm with you in that I believe that there is a disconnect with intent sometimes with what's actually happening. And this might be the anti-CPA or anti-accountant podcast today, because I think the conversation we're going to have reflects the fact that maybe credits don't do quite what we thought that they were going to do.
Or maybe at least they don't do what we hope they'll do for the people who most need the help.
Talk me through that. Talk me through what you mean. Like your moms, the ones who are in college. Tell me their experiences. Do they know? Do they care? Are they like tax credits? Why are you talking to me about this stuff?
So I was trying to think of a good analogy. I love analogies to try and explain complicated things. And you can tell me, Cecily, if you feel like this is accurate. But to me, a tax credit feels like encountering someone outside of a grocery store who's starving and saying, I see that you need food and you can't afford it. Go into the grocery store, buy groceries for the week, hang on to your receipt, and then 12 months from now, I'll give you 15% back on the groceries that you're buying today. So I think that tax credits, from my understanding, you have to be able to afford to purchase the thing or make the investment to start with. So it assumes that you can afford childcare in this case from the start. And childcare in the state of Georgia, nationwide, in particular in urban areas like Atlanta, is incredibly expensive. The average investment we make in a family here at Nana Grants is almost $15,000 a year.
And that's more than rent in most places.
Yeah, well, I believe minimum wage, like if you made Georgia minimum wage, you would be making around 16,000 a year, I think. So it's completely not even something you would consider doing. So in terms of the population that we serve through Nana Grants, they are very low income students. So the presumption is that you're able to afford childcare from the start. And most of the moms who join our program aren't using any type of childcare. They might be using a family friend. Their kids get off the school bus and stay with a neighbor after school, if we're talking about after school care, or they're using very inexpensive care that maybe isn't their first choice.
I see.
or they're falling behind. We've had instances where students are falling behind on care, and maybe it's a home-based provider who's kind of trying to work with them. So we encounter all sorts of situations that all point to the fact that if you're a very low income person, in particular in the city of Atlanta, childcare is completely unaffordable. So a childcare tax credit is not going to do you a whole lot of good because you can't purchase it from the start. And then from what I've read, statistically speaking, if you're not a tax savvy person, you may not even be aware that this tax credit exists or be in a position to take advantage of it, because there are a lot of bureaucratic loopholes that you have to, requirements you have to adhere to.
And actually, I think that analogy that you gave is a great analogy and is a fit. That is how credits work. They generally are their reimbursement. I think we used the phrase before, think of it like a rebate.
Yep.
So it assumes an ability to have a cash flow float.
Yep.
That very few people have. And that's not just specific to childcare. That's actually extended to multiple other types of credits that exist. There's a false assumption in there, I think, that we're affording it and then I therefore can get reimbursed for it later.
Yeah. And the tax credits were talked about in the context of this larger conversation we're having about childcare being unaffordable. So I think when you mix those two things, I think most people, if you open up the AJC and you read an article about the lack of childcare affordability, and then, the state legislature is trying to do something about this with childcare, you sort of assume that those two things are linked up, that this is actually going to do something about the fact that we have large swaths of the population that can't afford childcare. And I don't think it really accomplishes that.
And so one of the things that I've really been paying attention to is the policy piece of it, which is what you just said. And I know historically tax credits were being utilized as a tool to be used in a toolkit of ways to make childcare more affordable, ways to encourage employers to hire a certain segment of the population, whatever those were. And just over time, it's appeared to me that all the other tools have kind of fallen by the wayside. We just got this, if you're a hammer, everything looks like a nail.
Yeah. Yeah. Well, an interesting aspect of it that I learned about over the weekend, and I was hoping that you could explain this to me, is the refundable, non-refundable aspect, because it sounded to me like, you explain it, because I want to make sure.
No, please. Nope, go. Okay. I'm putting you on the spot.
So non-refundable sounds to me like if I do my taxes at the end of the year, and so there's a maximum. I think the maximum that you can get back with this tax credit is $3,000 if you have 2 children or 2 dependents, because this is actually for dependents. So it could be if you're caring for an elderly parent or a disabled loved one. If I don't owe $3,000 or more in taxes, I don't get that whole $3,000, right? So if I owe $1,500 in taxes, I get $1,500 off. So it's not a
really a refund, full refund, potentially.
There are so many wrinkles to this that make it, the more you read, the more I read about it over the weekend, the more I thought this is just really, I would be very interested to see the numbers, the actual economic impact for people who are low income, because from my understanding, anyone can take advantage of this. I could make $300,000 a year and I could take advantage of this tax credit, right?
Well, so in all the nuance, first off, I feel guilty. I can't believe I made you do research this weekend, Erica. That was not part of the plan.
Oh, I enjoyed it.
I also recognize that we've had a discussion before, and because you've said something, I can say that I have worked with Nana Grants as part of some of your CPA services. Normally, I wouldn't have even just mentioned that, but because we have worked together before, I recognize that you're similar to me. Like, I want data. I need to understand. I need to understand. So I should have known when we talked about the topic that you would have done some research. But you are correct in theory and big picture of how it works. There's still there are some nuances that you don't quite get, but that's fine. And what I mean by that is they do this particular credit, because we're talking about the child care credit, as opposed to the child tax credit, which is a different type of credit. Terminology is so crazy critical when we're talking about this stuff that's what makes it hard to get people to understand, because you can't talk in sound bites. You got to explain, and no one listens to the full explanation. So the child care credit or dependent care credit is open to anyone up to certain thresholds is how you get to the maximum. So there's a calculation. It's like, oh crap, I can't remember. I can't believe I'm remembering this. Up to 50% of how much you pay to a maximum of $3,000 per child. And if you are over a certain income threshold, which they just increased, it's a lower limit. It's 20% up to that. So it's like $2,200 or something. And frankly, part of why I'm going, what's the number? What's the maximum up to how much child? Because who has had any care that's less than $3,000? It's irrelevant. That number is irrelevant. It's like, what's the matter? It just doesn't make sense. But also the assumption that someone is able to pay this up front, regardless of these additional thresholds, limits it to a certain population of people who are paying it. And there are certainly plenty of people who it does help, because you need the help, but it is just help. But it's not the low income population. And it's because of what you said, the non-refundable piece. There's a piece of it that's refundable. So if the example is you get the refundable piece, I believe the amount now on the federal side is $1,700. If you don't have a liability, it's not that you don't owe. So this is another terminology does actually make a difference here, and there's a reason why I'm explaining this. So whatever your tax liability is, and then you have how much you've withheld, that's how much you owe or how much you're due back. But at the liability level, if you don't have a liability, regardless of if you've paid in or haven't paid in, you can get $1,700 of it back. And so there's certainly a segment of the population that this is a help. They can take, they have a tax liability, they're middle class, upper middle class, they're happy to get something back. $15,000 they're paying a year. And there are people in that population who very much, we've had to have some financial planning discussions, because they're going, I can't get my credit card debt under control. I can't get it. I just don't know what we're doing. And when you look at the numbers, what they're doing is they're paying for childcare and living off credit cards. So they keep looking for unnecessary expenses to cut out. And they're like, I don't have any. Like, you paid for groceries on your credit card. But to answer your question, it is valid that low income people who qualify for the credit, it generally would wipe out if they had a liability, but they're not getting additional in, even if they had that cash flow float. Because I think at one point you told me, first, the people that you work with and that you serve, they're not working, or they might have a minimum wage job. So they're making what, 20, 30?
Almost every one of our students is working. Close to full time. If they're not, they're experiencing some sort of underemployment or unemployment. We have lots of moms who do gig work, Uber Eats, things like that, and their average. Let's see here. Most of them are. Gosh, I've lost the statistic now. I think I sent it to you. Let me look. Most of them are making low 30s, mid 30s, which in city of Atlanta, I don't even know how. I don't know.
Yeah,
how
you
they're
gave me
making that
34.
work.
I think you gave me 34,
Yeah.
30. Yeah.
Yeah. Yeah. So I don't know. Would an average
So in
single
that
parent household,
instance,
$35,000 a year, what would a tax credit do for them?
and in that particular scenario, you are correct. It's their liability is wiped out, the standard deduction, et cetera, et cetera. They're not going to have the ability to take advantage really of a credit in that sense. In that sense.
So it's no use to someone who's.
So let me talk through just a minute about how credits work versus how deductions work.
Okay.
And then the couple of tiers within credits. Because we kind of use them all interchangeably, and like we said, we get a sound bite and how do they really work, but understanding their differences is helpful, especially when trying to apply tax strategies where you can apply them. And I have a note here that you've made it a point, and we are absolutely going to discuss poor people don't tax plan because how can they? They have no tax strategy. But just so we're level setting. So we in the tax world have something called above the line deductions, below the line deductions, and credits. And in all instances, a credit is always better because it's dollar for dollar. Now, whether you can use it or not, that's a different topic that we're going to get to in a minute. But a credit is dollar for dollar. So I'm going to make up some stuff. So I make $100,000 a year. I have a standard deduction of $20,000, so that leaves me 80. My tax rate is 10%. I'm totally making that up. So that's $8,000 that I now owe the government. But you know what? The government is offering a credit. They, like 5 feet tall women, I get a credit of $500. So literally, instead of owing $8,000, I now owe $7,500. So that is a credit, dollar for dollar. Alternatively, if they said, we like 5 feet tall women, we like you, but we don't love you. So we're going to give you a deduction instead. So remember I said I had $80,000? That was then taxed at 10%, $8,000. Now I have $80,000 less 500. So now 79,500. And that's now taxed at 10%. So I still save, but it's not a dollar for dollar reduction. So that's why credits are so appealing, especially on paper, because it's a dollar for dollar reduction. Now, because they're so valuable, getting over the hoops, getting over those hurdles to get that credit is a lot. There are a lot of requirements, a lot of paperwork. That's why I like that analogy that you used about keeping your receipt for the whole year. It's 2026 right now, 2021, 20. Oh God, no, it was before the pandemic. So maybe it was 18 or 19. The state of Georgia did a study about credits and their use and why were so many unused.
Yes.
And I was excited to be in the room because our elected leaders were like, well, we have all these credits, but nobody's using them. Why not? They were talking to the Department of Revenue, and us practitioners said, have you ever tried to apply for a credit? You're offering someone a $250 credit. It's going to cost them $500 in professional fees to get it. Yeah. On multiple occasions, I've told clients, you don't want to apply for that credit. Well, it's like, my fees are going to eat it up. And if you put it on the wrong form, then we're going to have a notice.
Right. Yeah. I think just basic taxes are very intimidating. And I think there is a there's a fatigue that comes with being poor that I think we never take into account. It's exhausting. I know just from the standpoint of someone who's working with low income single moms, I feel exhausted on their behalf, listening to them dealing with, going to the office to talk about, a problem with their SNAP benefit or what have you. And then you talk about taxes, and I think taxes scare people for starters. They're terrified of doing it wrong. And then if you don't have a lot of money to play with, like the thought that you might get a fine, or even the thought of paying someone to help you, like those are not considerations that people making $35,000 and raising children have the luxury of considering, right?
I am going to have to laugh because you just used the term, the luxury of considering the hoops that we go through in our everyday life. Oh my God. But you're right. That's the luxury of the time. Over the past 10 years or so, every task has turned into a project. It's supposed to be a task.
Yeah.
Heaven forbid they put it in the wrong account or they transpose numbers or we've been dealing with a business license thing that we're now on year 2 trying to get the city to correct it. That was just someone clicked the wrong button. And so put that on top of the normal parts of the things that they're juggling. I hear you. Yeah. Why am I going to think about taxes? You've got to be kidding me.
Yeah. And I believe you have to have the EIN number for the provider.
Yes, you do.
You have, it's not, they don't just say, hey, how much did you pay for childcare this year? There's a lot of
Are you trying to say they don't take your word for it? Are you really?
Well, don't send me down that philosophical rabbit hole. We make it very, very difficult for people who don't have resources to take advantage of things like this. Yeah.
There's like I said, I love tax credits as part of a toolkit. I am frustrated that tax credits has become the thing instead of a thing, because in all levels, on all credits, it does assume the ability to have the cash flow float. I don't care how big it is or how little it is. It's a cash flow float. And I was looking at some of the other credits that we were talking through. So we were talking about the child care credit. There's also a child tax credit, which is just, I have a child, it costs me more to live, absolutely. And I'm a parent as well. But even comparatively speaking, I've been doing this for 34 years. The far majority of that was before I was a parent. And I still have a challenge with people who view things so myopically in terms of tax law. I do now, but I didn't have a kid. I still kind of think it's in my best interest to have kids taken care of and an educated, workforce, because I kind of need a doctor at some point in my life. I'm gonna need a dentist at some point in my life. I have my own business. I kind of need employees. I'd like for them to have been taken care of. So not being a parent, I'm still all about how do we take care of these little people?
Mm-hmm. And you're talking about enlightened self-interest.
Oh, I'm all about being selfish. I can be selfish because it's in my best interest.
Yeah, enlightened self-interest. We all benefit from a healthy, educated population.
I like that. I like that. Yeah. My brother refers to me as, he's like, you are the hippiest capitalist I've ever met. I'm like, yes, because don't get me wrong. If I work harder than everybody else, I need to get paid more than everybody else. I'm not saying that. But so, yeah, it's interesting, the perspective. So your client base have no opinion about or impact with or interaction with a child care credit at all. That's what, right? I'm hearing that right?
I mean, I've never asked, but most of these students, when they come to us and apply, are barely paying for childcare if they have childcare. Some of them want to go to school, but they know they can't go to school if they don't have childcare. And I would encourage everyone just to pause and take a moment to think about the group of people we're talking. We are talking about low-income single mothers. So these are single parent households who are working and going to college. That's a lot. That is a lot. So they're paying tuition or they're taking out loans. Most of our students are going to graduate with $20,000, $30,000, up to $40,000 in student loans. I don't think many of them know that a childcare tax credit exists. I'm guessing most of them open up, TurboTax and do I guess there's a free version and do whatever the bare minimum is that they need to do. I feel like with tax credits and tax strategies, there's an assumption that you have money to work with. And this is kind of a thing with me. We will often have folks who will come to us and say, we would like to do financial literacy training. We've had a few banks come to us and say, we'd like to do financial literacy training with your students. And one bank came to us and I said, I would love that, but it would need to include you seeding a savings account. Because they have I think financial literacy is very useful, but it's kind of like looking at a drowning person and saying, I'm going to teach you how to swim. Calm down now. Stop thrashing about. And if you'll just stop now, I'm going to teach you how to swim. It's a lack of understanding the lived experience of people trying to pay bills in this economy, and it's getting worse.
100%, 100%. The assumption that lower income people need help with budgeting is frankly insulting. Low income people I know are better at budgeting than I am.
I have friends who make a lot of money and waste it. I think there is and you and I have discussed this on text before, but I think there is there is a morality judgment, I think, that goes along with the way that we try to help people who are experiencing poverty. We can't seem to get past this idea that it's some sort of moral failing or failing of intellectual capacity or self-control or, something like that. And it's in my experience, it's just not.
And it's also, there's a false economic assumption that people are making choices that are ignorant, where instead they are making actually informed financial decisions.
Sure.
And the example I use is if you have $2,000 worth of bills and you make $1,800 a month, why would you have a bank account? It's actually logical because you would otherwise continue to pay bounce check fees, undervalue fees, et cetera. In those scenarios, the banks are actually a hindrance to getting your money instead of helping you get your money. I do this as a profession, and I literally spent 2.5 hours last week working on closing an account that intentionally, because I know the law, I do estates, I do this. My mother passed 3 years ago. Way back when, we intentionally got a joint account with myself and my brother and my mom after my dad passed, because she was like, at some point, y'all are going to need to pay bills, da, 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 da. So it wasn't the money, like we had that much of it, but intentionally, because we did not want to deal with probate, it's a joint account with 3 people's name on it. 2.5 hours, Erica, 2.5 hours of just going, well, the primary, that's irrelevant. That's why it's a joint account. Do you have probate? No, we don't need probate. It's a joint account. And I'm managing it and I'm staying calm, and at least I have the confidence to talk him down of I know what the law is. But as I'm standing there, there were 2 other people during this whole thing that you can hear part of the conversation, that for various and sundry reasons, the bank was like, no, we can't give you the whole amount of your check. We can only give you this portion. Imagine if you needed all of your money. Someone is making an informed decision based on their financial facts that I don't think people recognize. It's not a lack of budgeting. You don't think that someone poor knows the $25 toaster is going to die in 6 months. I should buy the $100 toaster, but I will never be able to save up to the $100 toaster. I know that it's going to keep dying. I'm going to have to keep rebuying it. I know that.
Yeah. Yeah. No, if you think as a, high income person or middle income person that corporate America is trying to get in your pockets, you should see the predatory. I've witnessed things in the years of working with these students, payday loans, the most insanely predatory title loan situation that I was so upset. I got online and started researching, is this even legal? And I was shocked to find that it was. The interest rate was something so ridiculous. I just couldn't believe it was even legal. And someone teaching financial skills would say, don't do that. But if you're a single mom and you're in college, you don't have a marketable skill and until you graduate. So you're doing DoorDash and Instacart and all that. And you need your car. Like for a lot of people, their car is not just their transportation to get to and from something. It's their
currently that's a lot of people, that's their work.
And if you're looking at, okay, I know this is not, if you're in college, that a loan like this is not a good idea. But if it's that, or I can't work and then I'm evicted and I don't even have a car to be in then. So they're forced into there are no good decisions to make sometimes.
So let me ask you this, because I think you've heard me say before, I like trying to figure out systemic things, and I've used tax credits. Anytime I have the ability, and I've researched them, and I'm all about use the law the way that it's written. Tax credits that I don't agree with, you're darn right I used if I qualified for them.
Yeah.
Who wouldn't? I mean, come on. And I don't know your personal financial facts, but I assume that there probably have been opportunities that you had one or didn't, because sometimes you don't know till you put it in the software. Have you ever, okay, this might not be a regular person question. Have you ever thought about, is there a way to make these things more impactful to the people that they're supposed to help? Put you on the spot.
Well, I have, I was just like, wow, how much does she really want me to answer this question? I believe that we have, not to get too like pie in the sky philosophical here, I think we have a problem with bureaucratizing just helping our fellow human beings in this world. I think I see this in the nonprofit space. I see this in government. It's everywhere. We love to make things complicated. We love to create systems and processes. And especially, I think when it comes to serving low-income individuals, we love to make sure that we are keeping close tabs and making them jump through hoops and prove that you use this the way it was intended. And I am just a huge fan of, if you want to solve the problem, just pay to solve the problem. If we all see that childcare is not affordable, and I think we agreed upon the idea that it's in all of our best interest to take care of children and make sure they're cared for and educated. I think tax credits seem like a great idea to incentivize things. Like in my previous life in the corporate world, I did corporate writing, and I wrote a lot about the film industry tax credits. Brilliant. I mean, you can see what that did for the state of Georgia. I mean, because we're competing with other places and we're making it more attractive for them to bring their dollars here than California or New York or what have you. I think it's a great incentive, like I think there's a rural hospital investment
Mhm.
tax credit. Like that's a great incentive to get people to invest in something that's, in the public interest to invest in. But I
Mhm.
think a tax credit to solve a problem like childcare being unaffordable for low income individuals, I just don't think it doesn't seem like
Like
a good solution. It seems like maybe a good talking point if you're a politician to point to something and say, look how much I care. I've done this.
And
Maybe
I
that's me being
think,
jaded, but
yeah, well, there are tons of laws that get passed because somebody somewhere is jaded. So, um, and I also can see, you keep hearing me refer to it as a tool in the toolkit because there were pushes to do things like subsidize childcare centers so that it wasn't $15,000 a year,
Mhm.
in addition to credits, in addition to multiple ways so that people who work in the profession can have it as a profession and they can have a living wage.
Yeah.
Because
People who work in childcare can't afford childcare.
yeah, exactly.
Yeah.
and
it's become a very tough business,
Mhm.
very, very difficult business. The workforce situation is difficult. Inflation has
and highly regulated as it should be. But
there's a cost associated with that.
Exactly. There's a significant cost associated with it. Yeah, so that's interesting that it's a great way to do incentivizing versus solving a problem. That's an interesting perspective, Erica. Thank you.
You have to have the money to take advantage of it, I think is just the bottom line. One of my favorite things to say, and it probably annoys a lot of people because I say it all the time, is our values are evident in our investments.
Mhm.
And I think if you just, scroll through the news and see what we invest in as
You can
society,
see.
you can see where our values lie. It's a
Mhm.
very, evident. Yeah.
And then the when it comes to credits, and part of the legislative effect of credits, and like we've talked about, no one's going to take your word for anything. You do have to prove it, and you understand why. I totally get that. How do we find that balance? And what you see, the earned income credit, for example, is one of those areas of the tax law that is audited way more than any other aspect of the tax law. And that is a refundable credit. You were asking me earlier about what's refundable and what isn't. And in that example that I gave you, I think I said I made $100,000, 20,000 was the deduction, 10% rate, so I owed $8,000, and let's assume I qualified for a credit that was $9,000 credit. If it was a regular credit, I would have an $8,000 liability, a $9,000 credit, negative $1,000. That just goes away. Doesn't happen. It nets to zero. Negative 1,000 would just be zero. Oh well.
Mm-hmm.
A refundable credit in that same scenario, that negative $1,000 is actually a refund. I will get that refund back. And even though it's called a refund, even though I didn't pay anything in, that's what a refundable credit means. And part of why there's so few refundable credits, because people conceptually are like, it's not a refund, you didn't pay it in.
Yeah.
So people have a problem with that. And that's the earned income credit is that.
Okay.
It's a refundable credit. And theoretically, the way that I learn tax law and understand tax law is very much, what are we trying to accomplish, or what are we trying to discourage? What you probably will never, quotes around never, hear me refer to specific tax codes, et cetera. That's not what this podcast is. It's not the code section. But when I think about the earned income credit and earned income tax credit, why did that exist and why is it a refundable credit? Well, it's to incentivize people to go to work. even if you aren't really making a living wage, you're making something, yay, here's some additional monies for you so that you can bridge the gap to a livable wage.
Mm-hmm.
That was the design. But also, because it's a refundable credit, it's an area that is ripe for fraud.
Okay.
People make up that they made money, but just under the threshold to get a refund, to get the earned income credit.
Mm.
So as that has happened, the paperwork that your preparer, that anyone has to go through to say, yes, this is valid. They really did make $14,000. Because imagine way back when, before Uber started actually sending paperwork. I think they still don't send it if it's under a certain threshold. I come in and I tell someone, I did Uber this year and I made $12,000. Okay, I put it on the tax. How do you prove that? It's not a W-2. It's not a this. But if I know the threshold right,
Uh-huh.
I could make up numbers and get a refundable credit. So that's the earned income credit, and that's why people worry about it, why it has been so much fraud, and why it's so much audit that happens for that, and why the stack of paperwork is insane.
Mm.
The balance to that is, well, wait a minute, we're using all of our resources to audit low income people. That's unfair. But
I'm glad you said it because I wanted to.
and
Yeah.
people are aware, and you look at the numbers, and you're like, what the?
Mm-hmm.
It's easier to audit something that's on a sheet of paper than something that's not. A ton of tax planning is stuff that does not show up on a tax return. A ton of it's figuring out tax deferred savings tools. It's figuring out when your bonus comes in. There's tons, and I mean that's what tax planning is. It's timing and character, and frankly, that's also hard to explain to someone that you're helping them with their taxes when they look at it and go, but I still owe. You're like, yeah, but if I hadn't done that, you would have owed more.
Uh-huh.
So you're trying to prove something that you can't see. And so it's also hard to audit something you can't see. It's more costly, it's more complicated. So yes, fundamentally, gee, we don't want to, I shouldn't, okay. Fundamentally, why are we auditing low income people? We get bigger bang for our buck auditing high income people. That's much more labor intensive, cost intensive, and you're auditing what isn't there versus what is there. Like a computer can kind of do the earned income. So I'm walking through and kind of explaining why that's the case, and why that happens, and why refundable credits are so difficult to get past anywhere, because people can see fraud. You know, you can't necessarily see some tax planning legal, tax evasion illegal. But you can't tell if it's tax planning or tax evasion for the difficult stuff without investing a ton of time, money, knowledge, et cetera. Does that make sense, what I'm saying?
Absolutely. I mean, I think first of all, I need to pull back and qualify everything I'm saying. My focus is on very low income families. So I do need to say that for middle income families, you know, two working parents trying to get through those early years where you're paying childcare, that is so important. I think the child care tax credit can be a wonderful tool, number one, to ensure that women who want to stay in the workforce in those early years are able to stay in the workforce, because there's a time, you know, especially if you're early in your career, you have children, when you're looking at the math and you're like, I am literally just working to pay for childcare. And you do hear about women who drop out of the workforce, and if you drop out, you have to get back in, and, you know, there's a gap on your resume and all that stuff. So I think it does have value. I just think that the talking points around it have centered on maybe, you know, hinting at it helping people that it doesn't necessarily help. So
missing a valuable piece. Missing a valuable piece of food. Mm-hmm.
Yeah. But you're also doing good things for a certain segment of the population. Now I lost my train of thought. I in what you're describing, I think, like you said, a hammer. What is it? If you're a hammer, everything looks like a nail. Um, tax credits can be great, no doubt. But I think for certain things, they're just not as helpful as maybe we would like for them to be or hope that they are. Because of the inherent paperwork and bureaucracy involved, and the time intensiveness and resource intensiveness of taking advantage of them. Let's just, I think, maybe be honest about who they're helping, and then look for other strategies to help very low income individuals who can't afford childcare.
And even creating something more meaningful. And what I mean by that is it's difficult to say this sentence because it sounds like it sounds like it's a nothing. It's not a nothing, but it's not impactful. And what I mean by that is Georgia just passed, there's a child tax credit instead of care credit. That's $250 if your child is under 6. Thank you, $250.
I saw that and I was like,
I can use $250.
Where
Don't get me wrong.
Come up with $250 though?
Well, it's a budget. It's a budget calculation, and how can we impact the most amount of people? And personally, I'm going really, really help 5 people instead of kind of not really helping 2,000 people.
That is a mindset that I have encountered in our organization. So we pay for 100% of childcare until a student graduates. That could be 4 years. So 15,000 times 4, we're investing a lot in a family. And there are, especially when we were smaller and, had to do more, explaining of our model because we really didn't have a track record to demonstrate what we do. They're like, okay, but if I give you $20,000, you're only going to help 1.5 families for 1 year. But we have significantly helped that family.
That one family.
It's not here we're going to give you a Band-Aid that's short term, and when it ends, you're not going to really be any better off than when you started. We are changing the trajectory of that family. I mean, we have moms who... We have a mother. I love her story. When I met her, she was living in a mobile home in a very rural area in North Georgia with 3 little boys. She was doing remote IT work. The pandemic hit. She was trying to do her remote IT work at home with these 3 boys who were also doing homeschooling. And we were helping her with childcare, and we were sending someone to her home in the afternoons so she would have a little window of a break where they would work with the kids on their school. Like the pandemic was just like Wild West, like we're just trying to keep everybody in their home and in school. She is now working on her PhD, has founded her own nonprofit to help low-income single mothers in college, and has 3 boys who are now going to go to school. And she was the first college graduate in her family. So when you look at the amount of money it took to support 3 boys while she got her associate's and then bachelor's degree, that was a lot of money. But we changed her entire family trajectory. And we talk a lot about, multi-generational poverty and how do we fix this? I think we know how to fix it. I just think it scares us to think, oh my gosh, are we really going to give one family
that much?
$25,000 a year, $20,000, whatever. I agree with you. $250 a year, that's groceries for 2 weeks for a family.
2
That's
weeks?
I mean, if you're like, really, really frugal with it.
My son just hit 14. I swear his left leg is empty.
Yeah.
You need to get a job.
Yeah.
I ordered something from DoorDash the other day, and I purposely ordered one of the things that was buy one, get one free. I was like, great. That way we don't have to do anything, tomorrow. He ate both of them. Like, oh. And I can't get mad. You're a growing boy. You have to eat. But yeah, so the 250 is better to have it than not have it.
But could you
But
have
it's not
taken all of that
impactful.
money and built a childcare center that's free?
Yeah.
You know, I don't understand political advocacy and all that is not my bailiwick, because I don't, as you can tell, I'm a little jaded when it comes to, you know, policymakers solving these, but I just don't know where their heads are at sometimes, you know, when they come up with these solutions.
Well, Erica, you just hit me with an amazing story. And I want to give you a chance to brag a little bit about Nana Grants, because I believe I just saw that you just released your fiscal report for 2025. Brag a little bit. Brag some about your org. Let's hear something.
Oh my gosh. Let me pull it up here so I make sure I get my stats right.
Absolutely.
Yeah, we just came out with our impact report for the year, and to me, one of the most interesting things about the impact report, yes, it's the stats, but also we do a survey every year, and hearing from our moms some of the more subjective measures of the impact we're having is really exciting, because these things are hard to measure. So last year we provided over 2,300 weeks of childcare. We had students graduate with 13 degrees. And this is one of the coolest things. So we keep our GPA requirement pretty low, because we want to give an opportunity to students who come into the program and may be struggling. So our minimum GPA requirement is 2.0, but our average GPA runs around 3.3.
Nice.
So also, I love what that says about, I feel like there's a sense that you have to keep your requirements ultra high, because students aren't going to just excel on their own without this, you know.
That they're going to stay at the minimum level to get what they need to get. That perception.
And that is,
okay.
With this group of, I mean, if you're a student mother who's making $30,000 and has little kids, and you say to yourself, you know what, I think I'm going to go to college now. On top of everything else I have going on in my life, I'm going to get a nursing degree. You are just a very particular kind of person. So I love that stat about the GPA, but I would encourage people to go to our website and download our impact report. One of the most exciting stats to me is we ask students while they're in the program and then after they graduate, do you have at least $500 in savings? Because I feel like having an emergency fund is an indication of economic self-sufficiency. And I think we've all read the stats about, you know, a $1,000 bill can completely wipe out many families. And when they are students in our program, only 15% say they have at least $500 in savings. And when they graduate, that is almost 80% say they have at least $500 in savings.
I like that stat. That is amazing, Erica.
Yeah.
And so we're nearing the end, so we're going to wind down, and you're on the front end of the Tax Translator podcast. So I may not do the transition smoothly, but I'm going to officially say, now is the time we get to do our commercial. So
thank you.
You told people to go to your website, and that is nanagrants.org.
nanagrants.org. And you can download the impact report on our homepage and read some of the stories of our
And I
students.
assume there's also a button where they can contribute. I'm just saying.
There is a donation button on the website, and we always appreciate everyone's support.
Everyone's support, and organizations and corporations who want to do longer term support as well, multi-year grants. You like them all. You like them all.
I do.
This has been an amazing 45, 50 minutes. I appreciate your coming on and spending the time and helping me talk about something like tax credits, which sounds like, why does anyone want to talk about this topic? So I think we put some real faces to what we've been discussing. And so the goal is to continue these types of conversations, making taxes real and impactful. So I hope people will continue to join the Tax Translator podcast, which will be every 2 weeks, and you'll be able to see it in the same place. I'll get the link in the exit editing that they do. And also anyone who is interested in hearing other financial musings by me, there's a Tax Translator newsletter on LinkedIn. Look up Cecily Welch, and you will also see additional information at theaccountantyoucanunderstand.com. So I'd like to thank everybody for their time, and Erica, this has been a pleasure.
Thank you so much for having me.